Hi, thank you for tuning into this week's video blog at MonsterMortgage.ca. My name is Christian Harris, and I'm here to talk to you about an interesting call that one of our clients got from our Monster Terminator team. And what that is our customer service department. Every year they'll call our clients just to see if they want to have a review with their mortgage agent, i.e. myself or some of the other agents. And actually, this was one of my clients who said yes, they wanted a phone call on a particular date at a particular time. So I called them. We did a review of their mortgage product, and 3 years ago we had placed them with a 10-year fixed rate at 3.89%. Now, if we rewind 3 years ago, that was the lowest we'd ever seen 10-year money at, and the fixed rates weren't much lower than that. I think they might have been a half a point or 40 basis points lower, and at that time the variable rate was slightly higher, and it was all indications were prime was going to go up. So at that time we had a lot of clients who said, I want the security, and instead of taking the 5 years at a slightly less rate, I'll take a slightly higher rate and double my security. So 389 was a great option. Fast forward 3 years later, with many economic factors happening in the world that are had our prime rate drop, and after 5 years it dropped twice. We have variable rate right now at roughly 2%, and they're at 3.9. So the conversation went, should we look at breaking this mortgage, and what's the cost to do that, and what are the savings going to be? And they had about 7 years left, obviously, out of a 10-year, because we did this 3 years ago. So the cost to break was relatively cheap. It was a 3-month interest penalty because we had placed them with an institution that wasn't a charter bank, that didn't charge high interest rate differential penalties. So the mortgage was about $630,000. Penalty was about $4,000, so relatively low. And the option we looked at is we said, okay, your rate is at 3.9. Here is your payment based on 3.9. Why don't we leave the payment as is, but drop your rate to 2%? And when we did the amortization summary, the savings at the end of 5 years would be $58,000. So just under $60,000 by simply, and now you have to minus the penalty of $4,500, so $5,000 if you want to round up, excuse me. So you're looking at about a $53,000 net savings to this client by simply breaking the mortgage today, opting to the variable rate at 2%, however, leaving their payments at the old 3.9%, and now that money is all going towards principal, plus you have a lower interest rate. So the point of this is everyone's got a unique situation, but this all stemmed from our annual review that we do with our clients, and it was a good opportunity to review and see if there made better sense to look at other options today. So when you get the call from the Monster Terminator team, make sure you set up a time to speak to your agent to look at your options, and maybe you don't have a $53,000 savings, but maybe we can save you thousands of dollars as well. Thank you very much.